Ladies and gentlemen, good day and welcome to the Kirloskar Brothers Limited Q3 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Kirloskar, Chairman and Managing Director at Kirloskar Brothers Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Kirloskar Brothers Limited, I extend a very warm welcome to everyone for joining us on this call today. I'm sure you've had an opportunity to go through the financial results, which have been uploaded on the stock exchanges and the company's website. You must have seen the numbers, standalone as well as consolidated, as well as the order book. So I thought I would ask Alok and Rama to speak the international and domestic businesses, following which Mr. Makre will make a short presentation. Thank you. Of course, I'll be available for the question and answer session.
Hello. Thank you. The overseas operations have reported a good performance in Q3 FY23, healthy revenue growth, as well as improvement in operating profit margin. The company's Thai, UK, and South African businesses have shown resilience over the last few months amid multiple uncertainties, and in fact have gone from strength to strength. The Dutch business too is at an inflection point, and we are expecting the business to do better after the changes that we've made over the last year. The company's focused efforts to develop markets in water, fire, and industrial and services has helped it get more regular business rather than be dependent on large product jobs coming from oil and gas. That said, there's been an uptick in the oil and gas market, and more new orders have been booked in the sector compared to the last few years. That said, those orders are not reflected in the sales as yet. We expect those orders that are sitting in our order book will come into sales over the next few quarters. There have not been any major high-value product sales in the year-to-date sales of the international companies. It's mostly been regular daily business. The company's framework services business has picked up pace and is witnessing increased adaptation by the customers. The South African business has signed major framework contracts for services in the power and mining sectors. The Thai business has signed services in the steel and offshore oil and gas sector, and the British business has continued and signed on more companies in chemicals, water, and oil and gas space. The company is well positioned and is able to build up this business going forward. The order book condition, just from a point of interest for KBI BV companies, opening in January 1st, 2022, was about £52 million. And the opening order book position on the 1st of January 2023 is about £84 million. There are new projects coming up in the pipeline, and as we have focused on developing standard business or regular business, we are now pushing our dewatering autopine products so that they can further build another layer of base business for the company, which will help give consistent performance. With this, let me invite Mr. Kirloskar, Joint MD KBL and MD KEPL, to take you through the performance of domestic companies.
Thank you, Alok. On the domestic operations side, we see an improving demand for our made-to-order and engineered-to-order products. The market is also picking up for our retail segment. We continue to invest in modernization and productivity improvements at our plants in Dewas, Sanand, and Tannur. We expect to reduce lead times for delivery through such productivity improvements and ensure no sales losses. We have launched many new products, including numerous energy-efficient pumps, and will continue to do so in the subsequent quarters. We continue to be the only player in the retail segment with IE4 and IE5 motors, which are the most efficient motors available in the market. Most of our retail competitors offer IE2 motors at most. As all of you are aware, the company's recently launched APOEM program is aimed towards reducing our turnaround time, continues to gain momentum from the dealers and distributors. We expect this program to propel growth going forward. The government in the recently announced budget has focused on increased capital expenditure, which augurs well for the company's products in the agriculture, water, and oil and gas sectors. We firmly believe that with the sharp uptick in the government and public capex, the growth of the private sector capex will follow. Major capital expenditure is expected towards data centers, healthcare, energy, and industrials. The company is putting extra efforts to reinforce the presence and expand its product offering for these sunrise sectors. The growth in public and private capex cycle is expected to aid the growth for the domestic business. Now coming to the domestic subsidiaries, Karad Projects and Motors Limited continues its healthy growth phase. KPML's revenue grew by 11%, while PBT grew by 6% in 9 months FY23. The company is well on track to turn around the Kolam Steel Limited, which is witnessing a sharp growth in revenue as well as production. With this, let me invite Mr. Chittaranjan Mate, our CFO, for the financial performance highlights.
Good afternoon. Thank you, Rama. Before I share my views on financial performance of the company, please note that during Q3 FY23, one order of the company has crossed threshold for recognition of revenue as per rules followed consistently. Consequently, there is a favorable impact of rupees 31 crore on profit before tax during the quarter and 9 months ended on 31st December 2022. Let me start with consolidated financial performance highlights. Starting with Q3 FY23, the top line grew by 23% year-on-year to 957.5 crore. EBITDA grew by 160% year-on-year to 153 crore, while EBITDA margin expanded by 787 bps to 16%. Profit after tax grew considerably by 308% year-on-year to 88.9 crore. EBITDA without the impact of revenue recognition referred above of rupees 31 crore would have been 122.1 crore, that is 12.8% margin, 8.1% of previous year, and a growth of 107% in value terms on year-on-year basis. Now coming to 9 months financial performance, top line grew by 24% year-on-year to 2,606 crore. EBITDA grew by 91% year-on-year to rupees 268.1 crore, while EBITDA margin improved 362 basis points to 10.3%. Profit after tax grew by 240% year-on-year to 135.1 crore. EBITDA without the impact of revenue recognition referred above of rupees 31.3 crore would have been 236 crore, that is 9.1% margin as compared to 6.7% margin in previous year, and it's a growth of 69% in value terms year-on-year basis. Now coming to standalone performance, Q3 FY23 revenue stood at 611.9 crore as compared to 521 crore, a growth of 17% year-on-year. This contributed approximately 60% to consolidated turnover. EBITDA was at 79 crore, a growth of 115% year-on-year, while EBITDA margin expanded by 584 basis points to 12.9%. PAT for Q3 stood at 44.6 crore, which is a growth of 148% year-on-year. And on 9 months performance, revenue stood at 1,745.9 crore as compared to rupees 1,403.1 crore, which is a growth of 24% year-on-year. This contributed approximately 67% to the consolidated revenue. EBITDA was at 156.9 crore, a growth of 65% year-on-year, while EBITDA margin stood expanded by 219 bps to 9%. PAT for 9 months FY23 stood at 73 crore, which is a growth of 79% year-on-year. This is all from our side. We can now begin question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and one. The first question is from the line of Mahesh Pendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you for the opportunity. Very impressive performance. Sir, one clarification is that we said that we have received 31 crores of benefit at PBT level because of threshold level in one of the projects we achieved. Is this happen in domestic business or it's international business?
It's a special order for domestic business.
Okay. Sure. And sir, the margins have been very significantly gone up. I mean, so what could be normalized margin one could see from both domestic and operating export side?
I think we have consistently maintained that since all the investors felt that margins would be improved, we said that these margins will rise consistently over a period of time. It's the effort that has been put in by the entire team that's resulting in this performance.
Because sir, operating performance for even international business, our operating margins are showing around 21%. So just trying to understand, is there any one-off item in the international business as well?
No, there's not been any one-off item. I mentioned that when I was speaking that it's just the main daily business. The service business continues to creep up and become a larger share of the overall portfolio. And I think the main difference is that the other businesses have helped the business cross break even. I think in the past someone had asked me this question that there's so much service business not coming to the surface. It's maybe because at that time the service business was compensating for all the regular business which was not performing as well. But as the regular business, which is our baseline business, starts getting over the break even, then we get that effect in the business in general.
So these margins are sustainable going forward?
You're asking in the context of international or domestic?
International.
Yeah, I mean the margins. You have to also see that what you're seeing is 9-month margins. They exclude our first quarter, and for the international business, the third quarter of KBL, which is the quarter that just passed, is their last quarter, and then the first quarter is a first quarter. So I mean, I would look at it from an annualized point of view rather than just a 9-month point of view. That's what I would say to you.
Okay. And last question, that you mentioned that at the beginning of the last year, we had an order book around for international business was around 52 million pound, and now it is down to 88. So do you think execution will be very strong over the next 3 to 4 quarters?
Like I mentioned, we opened at 52, which roughly translates into 520 crores last year. And this year the opening order book is about 84 million, which roughly translates into 840 crores. So yes, I mean definitely there is more pressure for them to deliver. And there will be hopefully some in and out business as well.
Sure. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ranjit Sivaram from Mahindra Manulife Mutual Fund. Please go.
Yeah, hi sir. Congrats on good set of numbers. Sir, if I look at your this threshold recognition, so the cost associated.
Mr. Sivaram, the audio is unclear from your line. Please use the handset.
Yeah, I'm using handset only. Is it audible now? Hello?
Yes, sir.
Yeah. So in this 31 crore of additional which you have told, the cost till the threshold will be booked in the previous quarters, and now we are booking the profit. That's how it works, right? As per the accounting standard.
Yes, as per the accounting standard, when the percentage of completion exceeds 25%, or whatever is set by the company, time, we book pro rata income also. Earlier, only cost was booked, cost and equal amount of revenue.
Okay, so in the previous first quarter and second quarter, the corresponding cost was booked, and this quarter, the margins are also booked, right?
Yes.
So how much?
Cost as well as pro rata margins will be booked in subsequent quarters.
Okay, and how much is pending now? What percentage of this is over?
Some of that we cannot disclose because it is a disclosing margin on that margin percent on that order.
Okay, but this is a one-off order, no? Like it won't repeat, right?
Yeah, we believe it's a one-off order.
Okay, and for one more thing which I noticed in your presentation is that your standalone order intake has shown a dip. It is 485 crore compared to 814 crore last quarter and 624 crore last year same quarter. So why is that reduction in order intake?
If you see the trend, last year Q3 was 624 crore, then it went to 721, came down to 596, again 814. Basically, part of our business is against made to stock, so their order booking is not there. And there it is made to order an engineer firm. It depends on the pace of order finalization by the customer. Inquiry would be there, but the time which they take for finalizing accordingly, there would be ups and downs quarter on quarter.
So it's more, I should read it more as a timing issue, and probably structurally the orders will come back in the fourth quarter. Is that right?
Yeah, this normally a huge funnel, order funnel, and like Mr. Mate said, depends on when customers finalize.
Okay, so probably it might come back in the next quarter. Is that reading right in our understanding?
Yeah, let's hope so.
Okay, and sir, is there any forex impact in your international margins in this quarter? How much was that, if you can quantify?
Yeah, I think there's a forex impact in the 9 months, and we have recovered some of that impact, or maybe I think 20% of that impact we've recovered in the third quarter. But year to date, the 9 months, there is still quite a significant forex impact.
Okay, so how much was the impact for the 9 months?
Approximately 25 crores.
So 25 crore of your 9-month profit in the overseas subsidiaries is kind of impacted. Hello?
For accounting standard, the loss booked under the head forex loss was 25 crores. But while dispatching the goods and realizing, we got some benefit of increased sales realization. So I would say the entire 25 crore was a forex loss. Part of it was already recovered through increased revenue.
Okay, so for this quarter, there was a recovery in this forex, this quarter, Q3 FY23?
Yes.
How much was that?
Roughly 10 crores.
Okay, so roughly 10 crores is the kind of gains that we got in this quarter. But despite that, your margins are looking healthy. That means structurally you believe that the things are falling in place.
Yeah.
Okay. That's good to hear. And in terms of this, like this irrigation projects, we are hearing a lot of announcement at least from the government and from some of the large companies like L&T. So in that market, like what is your overall visibility? Are you seeing good order finalization happening? And because we have a good product there, are you still able to maintain your market share there? What's your overall thought in irrigation market?
Whether it's irrigation, water supply, or power, as we have explained earlier, out of the total number, the amount that is announced by the government, roughly 1 to 1.5% is what is the pump content in any large project. And we remain the preferred supplier of choice as far as large players in this market are concerned. And I think I've also explained that we take the orders on our terms, which is advance and letter of credit. So even then, we supply on a monthly basis 10 plus large pumps. And large we define as more than a megawatt to 1.5 megawatt.
Okay, great. And sir, lastly, on the small pumps business, what's your overall feel in terms of the market? Are you seeing good demand, and do you believe that the trend will continue in the small pumps? And anything on the pricing, if you can share, like pricing, have you taken any pricing action and market share?
Yeah, I'll answer that question. So the market is picking up as far as the retail segment is concerned. We have not increased our prices, and we don't foresee any price increase as of now. But we do see that there is a lot of healthy booking from customers, so that should not be a problem going forward.
Okay, and what will be your utilization there in small pumps?
It would be anywhere between 65 to 70% utilization.
And how much of an increase in that has happened over the last 1 year?
How much of an increase in?
Utilization in the small pumps?
No, I think it's gone from around 55 to 70.
Okay. Sure. Thanks. I will join for further question. Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique Portfolio Management. Please go ahead.
Hi, good afternoon, and thank you. So first question again on international. I believe after a gap of 2 years, we are seeing the margins that we are in profitability. Alok, if you can just throw more light, and is this just a Q3 phenomena, or how should we read into this number?
Pratik, I would look at the 9-month number, and also, as you know, generally, and I'm not making a forward-looking statement here, but generally the first quarter in any company tends to be a little slower. And what you're looking at, and I've not looked at the Q3 number at all in here. I'd look at the 9 months and then consider what a Q1 would be like. So that's really how I'd look at the numbers. If you want to look at the international holistically. And but I would say that the main, like we've said earlier, there's no major job that's gone through. In fact, just to put it in context, SPP as an example, used to do 25 million pounds just in oil and gas revenue in its peak days back in 2013, 2014. At its lowest, we did 4.5 million. Last year, we did 7 million. So we are actually closer to the lower end than to the higher end. So from that point of view, I would say that, it's basically all the other businesses that, like we've been saying, we're trying to develop and stabilize the baseline of the business. And that's really what's slowly kicking in. Our services business anyway had picked up, and, we were touching 35 to 40%. But the services business in a way was cross-subsidizing all the other businesses. So now that I think most of them are back over break-even, you get that effect that you see in the numbers. And I think it's actually more visible in our South Africa business, where they are at 50% service business.
Fair enough. So just one clarification on this project. You mentioned that it has crossed its 25% completion and hence your book is. So this would be, recurring in the future also, right? Or this was one-off and this is done?
Actually, let me clarify. This is not a turnkey project the way we were undertaking earlier. This is our order development order with a long delivery period. So as per accounting standard, we follow POC. And yes, in subsequent quarter, there would be impact, but it won't be in such a leaps and bounds of 25% and like that, because it would be a slow impact.
Okay. So any light that you would like to throw? What kind of development order is this? For whom the end customer will use?
Cannot disclose.
Okay, fair enough. And the last question on the standalone part, I mean, are we seeing, we spoke about the cyclicality in terms of orders that we get, but in terms of decision making, the confidence on ground, any color you would like to throw on that?
Well, I believe that these things happen year on year. There's nothing abnormal that we are seeing.
Great. Thank you and all the best.
Thank you. The next question is from the line of Vikram Rawat from East Lane Capital. Please go ahead.
Yeah, hi. Thank you for giving me the opportunity. Sir, three questions from my side. One thing is on the overseas side, the margins which you are now saying on a sustainable basis would be around 9%, which comes on a 9-month basis for our future. Is that the correct answer?
I think what I just said earlier was that you're seeing it on a 9-month basis. And effectively in these numbers, the first quarter of KBI BV is not included. I've just mentioned that, traditionally first quarters are not always the strongest quarters for most companies. I'm not making, like I said, any forward-looking statement on that. But I think we should factor that in when we look at a general margin, for rather than just looking at second, third, and fourth quarter of the company.
Okay, so probably it will be somewhere between the 5 to 7%. Is that the correct assumption? If I will factor in the first quarter.
Yeah, I mean it's hard. I don't want to make a prediction what it.
Okay, because we don't have the fourth quarter, your last year first quarter number calendar year. Okay, anyway, and second on a domestic side, can you just highlight what is the inquiry pipeline on a MTO and an ETO, and what was it in the last year? Hello.
Ladies and gentlemen, the line for the management has got disconnected. Request you all to please stay online while we reconnect them. Thank you. Ladies and gentlemen, the line for the management is reconnected. Thank you, and over to you. Mr. Rawat, please repeat your question.
Mr. Rawat, sorry, I was answering your question. And I think all I was saying is that one should consider it from a 12-month point of view.
Sure, thanks for that. Another question on the domestic side. So can you just highlight what is the inquiry pipeline on a MTO and ETO order side currently outstanding? And what was it? It was 1 year back?
You want to know the inquiry pipeline?
Yes.
We don't have the numbers just now.
Okay, not an issue. And can you just also highlight how is the working capital and the cash position, net cash position in the book, or net debt?
On the domestic side, I would say that we are cash positive.
Okay, thank you. That's it from my side.
Thank you. The next question is from the line of Manish Goyal from ThinkWise Wealth Management. Please go ahead. Mr. Goyal, your line is in talk mode. Please go ahead with your question. Mr. Goyal, please unmute your line from your side if muted. As there is no response from the current participant, we'll move on to the next question. From the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, congratulations on good set of numbers. Am I audible?
Yeah.
Yeah, see, I had 2 questions, okay. The first was, after a very long period of time, we are seeing the CapEx cycle recover, okay. And last time was 2002 to 2010, okay. How different is this cycle versus the previous one? And is the intensity of competition similar, or you think the intensity of competition is lesser, more? And scope to increase the pricing, especially on the industrial side of the business? Can you give some of your thoughts of current cycle versus historical, of how it has been?
I think the capex cycle is quite strong in certain parts of the business, whether it's steel industry or in industry, building and construction. I think in all these areas we see very strong. People are coming to us asking for products, etc. And what was the other question? Price rise. Actually, we are doing consistently over the last year, and luckily, I think the commodity prices are softening, so we've been able to hold on to our prices. And third question was about competition. I think competition is still there. I mean, there are many more players who have come in, not only coming in from outside, but setting up inside India and competing with us. That is not an issue.
Okay. And the second thing is on the order book accretion in the domestic market, the type of accretion we are seeing for other capital goods, let's say a boiler, turbines, we are not seeing that much in our case, okay? Even when we look at our foreign subsidiaries, like Alok mentioned, there has been a 60% growth in KBIV's book in last 1 year, okay? Opening order book. And so which was 600 crores, what I see is currently 900 crores, Concall minus standalone. The standalone, the accretion is much lesser, okay? It has grown by 10%. So what am I missing? Because what we are seeing is pretty strong growth in order books across the place, and even in our own outside India book, it is pretty strong. But on the standalone entity, it is not showing that much traction. Accumulated book. So where are we missing something, or can you give some light on it?
What are they limited?
No, I think number one, it's a question of timing. Number two, I think you're looking at just 1 quarter. Don't look at it quarter per quarter. Is all I can say.
No, see, I'm not talking about quarter. But let's say Q3 FY22 versus Q3 FY23, the cumulative order book growth on the standalone is 10%, okay? And if I look how in Concall minus standalone, the 600 crores has come to something like 900 crores, okay? In 1 year, what we have seen is accumulation is much stronger. But on standalone, we are not seeing, okay. And this is similar in case with other companies also, where we are seeing 30%, 40% order book growth, and our cumulative order book growth is some 10%. That was the way I was looking at it.
Well, let's look at next quarter what happens.
Okay, let us see. Thank you, and let us wait for better things.
Yeah.
Okay.
Thank you. The next question is from the line of Ravindra Nayak from Sunidhi Securities and Finance. Please go ahead.
Thank you for the opportunity. So am I audible?
Yeah.
Yeah. Sir, I want to, because the results are good, maybe the international operation has been good. Can you please highlight the SPP UK's performance in this quarter vis-a-vis the 9-month period? You have reported EBITDA of 34 crores and a sales of 140 crores, whereas the 9-month period, the 367 crore sales, 30 crores EBITDA. How we will reconcile it? What are the changes in this business? That is question number one. Secondly, about what is your the contribution from the services in the standalone business for the 9 months, and how it is growing in 9 months, and also how you are expecting the service business to grow, the standalone business. Thank you.
For your question, I think when you mentioned that, I think we should look, I mentioned it earlier also, we should look at the companies, when you're saying 9 months, it's excluding our first quarter. And usually in most engineering companies, the fourth quarter is stronger. So I would say that, that's probably why you're seeing the effect. Yeah, so if you look at it last year to this year, I would say the difference in margin is only coming from the fact that, the company's main businesses, which are fire, water, dewatering, transformer oil pumps, all the other businesses also are doing better, and obviously all of them are above their break-even point. Like I mentioned last time, that ensures that all your base costs are taken care of. And then we have the service business, which obviously has been growing over the last few years. It's touching between 38%, sometimes 40%. So you get that multiplier effect because now that additional profit that's generating is coming directly to the bottom line and not cross-subsidizing any of the other businesses. So I would say that's why you're seeing that effect. I think I mentioned this earlier to someone else as well. Does that answer?
So the SPP UK is actually the service business has improved. That is why we are seeing the better margin on SPP UK, or it is something we can look at. Yeah, that's what I was saying. It's not the service business has jumped up significantly. The service business has been growing, and we've been saying this quarter on quarter that in the last 2 years, in fact, that from 12% it's up to 38% to 40%. But people would ask me, why is it that we can't see that? And the answer to that is that the other businesses were not having that level of order book, and so they were not covering all their costs, which is the regular product businesses. Last year, we've seen slowly the rise in the other businesses as well. Because they've been focusing on various areas and they've managed to make it slow breakthroughs of standard business, which is our fire pumps, which is our water pumps, which are our transformer oil pumps. And as those have crossed break-even point in their respective areas, the profitability which was there before as well of the service business has now just come down to the bottom line. That's what I've been saying. Okay. No, my worry is that, this in the last 6 months, for the 6 months, you have a loss in this business, SPP UK, and this quarter it has completely turned around with a significant profit. So whether it is some forex impact or there, because the pound is also, appreciated in the rupees. So you are reporting the currency in the rupees. So how should we reconcile the forex part and also the service part? That is my worry.
I think Mr. Martin mentioned earlier that we actually have a negative forex impact in the 9-month number. But you're right. I mean, the currency has depreciated, and there is some impact in terms of the multiplier factor from the depreciation. But I don't think that has been very significant from last year to this year.
But
okay.
Down to rupees 1 year back, and now it's almost 700. It had dipped in between, but again recovered.
Yeah.
Okay. So about the service business and the standalone business, what is the contribution service in the total business in 9 months, and also how you are looking at the service business going ahead?
You're talking in which business, the international business now or the standalone?
No, standalone business.
In the standalone business also, the service business has been slowly increasing, but I think we should also appreciate that it's different markets. I mean, in countries like India, I'll just give you an example. Many refineries or power plants, they service their own products. While overseas, you'll appreciate that because of lack of labor, usually the service is outsourced to other companies, and there is no local maintenance team that the company that wants service is having on its by itself. So the model is a little different, and so in India it tends to be more spare parts focused, while overseas we've focused on developing the maintenance contract, 3 and 5 year maintenance contract with these companies, like oil companies, like chemical companies, like water companies, and then supplying not just the spare part but the actual service, which is retrofit, refurbishment, upgradation, all kinds of other services on the base of just the service contract that we have. And we only include the 3 to 5 year service contracts in what we call our baseline business, because there we have an agreement of an offtake amount, rather than it just being a one-off service agreement with some customer who wants some pump repaired.
Okay. So, is there any chance, because, if you compare with your competitors, Indian competitors, KSP and also the other competitor WPL, so the gross margin for them, it is around, you can say, for 50%, but yours is 40% currently. So whether it can go up to that level or it is very difficult to achieve to that level?
I think what we have been saying consistently is that we will be working on ensuring that our margins are equal to or better than our competitors.
Okay. And can you give the way you have presented in a PPT, made to stock, made to order, engineer order and projects, this segment for the 9 months or in the quarter itself, is it possible?
Are you referring to a chart which is a part of our presentation?
Yes. You have made this segment of made to stock, made to order, different segments. So is it possible to give that for the 9 months and also for the quarter?
Generally, we present it on annual basis, but we will consider. Yeah.
So it's not possible.
Yeah. Page 23 of our presentation. Yeah.
Hello?
Yeah. And coming
so is it not
margin, we are comparing international companies. And if you see consolidated results of KBL, there also you would see we are around 49% for 9 months and 51% for the quarter. Because standalone, you should not compare with KSB and others, but if you see our consolidated results, those are close to 49%.
Okay, so it is comparable on the consolidated basis with the international peers.
Yeah.
Okay, understood. Thank you, sir. Thank you very much.
Thank you. Participants, to ask a question, you may press star and 1. The next question of Ritesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. Just to triangulate the, the 9 months of financial, adjusting for effectively this incremental revenue which came in this quarter. So the impact of incremental revenue for which there is no related expenses this quarter is about 30 crores odd, is it?
Say that again. Yeah.
No, I'm saying the amount which effectively we have recognized as revenues for which we don't have the corresponding expenses in this quarter is about 30 crores odd, is it?
I won't say there is no corresponding cost. I would say that the margin has been recognized for the first time after crossing threshold, and that margin has been 31 crores. Till the last quarter, cost and revenue which was booked, but margin was not booked. But as per the accounting standard, after crossing the threshold, we have started for it a margin.
Got it. So to put another way, we are effectively slightly overstating the revenues in PBT in Q3, but we have actually understated it in the first half. So if we look at 9 months of revenues kind of profitability, we'll be adjusting for this order effectively. Is that right?
I won't say understated. It is as per the accounting standard.
Yeah. I'm just talking about in terms of. I'm not saying that we are doing anything which isn't kosher as per accounting standards. I just want to understand the economic accounting of this so that we can understand how we should be looking at it. As to they'll normalize the run rate, if you will, of the PBT.
Yeah. Okay.
So H1 would have ideally been higher by 30 crores and the Q3 would have been lower by 30 crores at the PBT level. Is that accurate in my understanding?
No, that is not accurate because the job on this happened only in Q3, certain steps. Otherwise, we would have recognized in H1 only. The progress of this order crossed certain stage only in Q3. It had not crossed that stage in a half year.
Okay. So then, just to understand, so how does the accounting exactly, okay, if you could maybe just run us through this so we understand it more granularly, but primarily to understand the run rate at which the company is on a normalized basis.
I won't call it a run rate. Basically, for a long delivery period, there is a separate method of recognizing revenue, which is called percentage of completion.
Okay.
And there is a threshold which is defined by accounting standards, Income Tax Act guidelines, and company regulations.
Okay.
On crossing that threshold, over and above recognizing cost and equal amount of revenue, company starts recognizing pro rata margin which are anticipated on this order and which is audited.
Okay.
So we crossed that threshold in Q3, so we have recognized that margin in Q3. And in future, the recognition of revenue and margin would depend on the progress happening in each quarter.
Got it. Okay. Okay.
So this is like I explained an order which is a long-term order, and we will be delivering parts of it over a period of time. We can't tell you exactly when we will be delivering the next lot, but whenever it does, both now that we've crossed 25%, both the revenue as will be recognized together. Until now, we could not recognize the margin because we had not crossed a threshold which has been defined in the accounting standards.
Got it. Got it. So then, so the question is, if we have to then look at your 9 months account, is that a more accurate reflection of what your PBT is than if we just look at a Q3 effectively?
Yes. If you say 9 months, yes, that would show the correct cumulative position.
Got it. All right. All right. And the other question is with regards to going ahead. So, I mean, even adjusting for this, we've had a great quarter both from a revenue angle and effectively profitability angle as well. But we have been able to hit, I guess, about the 11% EBITDA marginal level. So is that something which we expect we should be able to maintain going ahead?
Comment about EBITDA margins for future, I think it would be a futuristic thing. But as our CMD sir has been telling in earlier meetings also, our endeavor is always to cross double-digit EBITDA margin. That is our effort, but when it would happen, it's not possible to give any prediction.
Thank you. Mr. Gandhi, may we request that you return to the question queue for follow-up questions. Ladies and gentlemen, please limit your questions to one per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Looking at FY24, so how will your figures are going to look like? Are you expecting any incremental growth?
I don't know whether we are allowed to answer questions.
No, just an overview of your operations, it would be nice.
We are preparing for growth.
Yeah.
I think the country is also preparing for growth. So, yeah.
All right. And how much is the cash do we have at the end of Q3?
this would become unpublished information because we are supposed to publish balance sheet only half yearly and yearly. So what we have not published our balance sheet position, I cannot disclose at the moment.
Thank you. Mr. Raj,
we are controlling working capital tightly. That's what I can say.
Thank you. Mr. Raj, may we request that you return to the question queue for follow-up questions. The next question is from the line of Manish Goyal, an individual investor. Please go ahead.
Yeah, thank you so much. So there are two questions, one for Alok and one couple for Rama. So Alok, just on the STP, you did mention that our order book has grown from 52 million to 84 million pounds. So is it that now, as you were discussing earlier, that this is more short cycle in nature and which implies that we should be booking revenues at more regular intervals than to a quarter 4 calendar year phenomenon? And also if you can also highlight that aftermarket or maybe framework contracts, now we're winning more contracts, so do you see revenue contribution increasing? And always we were a product company in STP as well, so why is it that we probably saying that the services business was cross-subsidizing the product business earlier? Thank you. And I have question for Rama as well, so I'll come back around that.
Anish, I'll answer your second question first because I've not really fully understood your first question. So I may ask you to explain it. But your second question is that we're a product business, that is correct. And that's why majority of the sale is of products, more than 50%, in fact, 60%, maybe a little bit more than 60% also is products. But the product business, as you know, SPP is heavily dependent on oil and gas, and I gave the benchmark numbers that, the lowest we've done in 2017 was 4.5 million, and the highest we did in oil and gas was close to 25 million in about 2014. So, and this year we did 7 million in the whole calendar year, which is Jan 22 to December 22. So it's closer to the lower end of the scale, right? So I mean, that business had to be offset by other businesses to grow to be able to cover all the fixed costs. And so that business effectively was that role was taken over by other businesses like industrial fire, which grew, but that's from 25 to 4 or 25 to 7 is a big drop. And obviously, while we cut costs significantly and we've cut 1/3 of the staff, 1/3 of our workforce, not the staff, 1/3 of our workforce to cover the costs. We've still managed to keep the top line more or less the same through all kinds of productivity efficiencies. So I would say that even after that, it was difficult for the other business to make up that gap immediately, and it takes some time, as you will appreciate. It's taken a while actually for us to cover all that difference in revenue in other businesses. But as they have covered that difference, we are able to now ensure that they are also profitable, but of course the real profit comes from the aftermarket, which of course comes now to the bottom line rather than it like it did in the past, where it was basically covering all the other costs of the business. Because to have the aftermarket business, you obviously need the new product business, because unless you are installing products, you're not probably going to get just the aftermarket like that. Our strategy, as you know, has been identify areas where our pumps are there, even if the population is small, approach the customer and then try and get a service contract on not just our pumps but all the pumps. And that's really how we've been, entering that business. So I would say I hope that answers the second part of your question. Can you explain to me what your first question was? Because I didn't understand it.
That now we are focusing more on the standard product business and services than to a longer cycle. So I presume that in our order book also now that portion of standard products would be higher than probably the larger size orders. And what it implies is that the execution would be faster than the long cycle products. So that means we'll have a more even out revenue booking during the year. How should we read into it? And maybe if you can also give us a perspective, like this is quite a historical high order book for us in SPP. And if you can broadly give us a sense of a broad breakup from the segments which it is coming.
Yeah, Manish, I think our CMD also had mentioned the same to me, that we got evenized sales through all the quarters, because otherwise, even in the good years, SPP used to be loss-making in first and second quarter, and then it would break even in third quarter and do well in the fourth quarter. So our objective also has been the same, that we try and even out quarter on quarter. And you're right. I mean, it's slowly happening, where we are slowly trying to even it out quarter on quarter. But I cannot commit to that this year, because, like I mentioned, there has been an uptick in the oil and gas business, and generally we are well placed in many large jobs coming up. So based on that, I won't say that is the case maybe in the near future, but definitely that is our objective, that with the service business where we have agreed offtakes, we try and even out the sales quarter on quarter and through the years, so that we are more stable as a company.
Thank you. Mr. Goyal, may we request that you return to the question queue for follow-up questions. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, thank you for opportunity. Sir, you mentioned that around 31 crore benefit we received at the standalone level because of the change in threshold level for one of the projects. So if I strip aside from the standalone business, our standalone margins are around 7.4%. So is it a right way to look at?
Actually, this is a genuine margin, so there is no need to reduce it. But if at all you want to compare it, yes, the standalone margin for 9 months, which is at 7.1%, it would go down to around 1.5%.
Okay. Sure. And one question to Alok. I mean, if I look last 4 quarters for international operations, I mean, if I look at all the subsidiaries, and if you remove the foreign exchange gain, then the margins are around 11.5%. So is it the margin we look at for international business?
How are you looking at it? Because there actually has been a loss on forex. So I'm not sure how you're looking at it. You're taking the first quarter in from KVL's last quarter when you say 4 months
to December, last consecutive 4 quarters.
So yeah, I mean, if you're including January, from January 22 to December 22.
Yes.
Then that would be the margin, but I'm not sure that number is correct. I need to get it checked whether what you're comparing is correct from January 22 to December 22.
But at least double-digit margin possible, given the uptick in the product business and the servicing business.
I mean, nothing's impossible, but I mean, we are trying, like Chairman Managing Director said, to get to double-digit margins everywhere. And I think, like I mentioned last time, we have to have that mix of services, because finally the margins it generates there will be compared to the Indian cost of capital. So it has to make sense from an Indian point of view as well. So I mean, that's definitely in our sights, and it's something that we want to achieve.
Sure. Thank you so much.
Thank you. The next question is from the line of Ranjit Shivaram from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah. Hi, sir. Just on the small pump business, I'm just trying to understand because some of
the audio is unclear from your line. Please check.
Okay. Hello. Is it clear now? Hello.
Yes, sir.
Yeah. So in the small pump business, like we are seeing some of the farm-related, irrigation-related, that small pumps, but submersible pumps, those companies are doing well. So for us, also, that portion of the business shown good growth and traction?
Yes, we do sell submersible pump sets in our retail sector as well, and we have seen growth. And we do see healthy growth in both submersible as well as monoblocks.
Okay. And in the other portion of the small pumps, have we seen any market share gains, or we believe that the overall market has seen such kind of growth?
No, we have been continuing to grow. I think you can see from our numbers. I believe it says we have grown by around 13%.
While the market growth would have been?
We believe the market growth is less than that. It's around 10.
Okay, so we would have had some market share gains.
Yes.
Okay. Okay, and any expansion, because now that we have reached 70% utilization, so probably are we looking at expanding any of our portfolio in the small pumps?
Expanding the product portfolio?
No, in terms of capacity.
In terms of, I'm sorry, we could not hear you.
Capacity expansion, any capacity expansion on the cards?
Yes, we have already started and we're gradually doing that every year.
Okay, and that will be
bottlenecking or modernization to enhance productivity.
Okay, would be a capex of how much?
I don't believe it will be a substantial capex every year.
Okay, sure. Thanks. All the best.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as the last question. I would now like to hand the conference over to Ms. Kirloskar for closing comments.
Thank you all for joining us on this call. For any queries, please feel free to reach out to us or our investor relations consultant, Strategic Growth Advisors. Thank you.
Thank you. Ladies and gentlemen, on behalf of Kirloskar Brothers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.